Hello, I'm Chris Pedersen and this is Stock Watch on Wednesday, the 3rd of April, 2024. All information is general advice and may not be suitable for you. Always consult your financial advisor before making any investments. Any questions from viewers should be sent to stockwatch@fnn.com.au. Few market observations. First off, minutes from the RBA show they're really in no rush to lower rates, but as mentioned before, they're driven by data. The data says the economy is slowing, they will lower rates. If the economy is still strong, well, they're going to be reluctant. Dwelling prices rose again in March. This is getting pretty uncomfortable for people wanting to enter the housing market. Equity markets are consolidating gains from the last few months. We had a rise November, December, January, February, and some in March. Now, what we will probably see over the next few months is, with this consolidation, a sideways market, and historically, May and June are down months. Then we have an up month in July. That's historically. It doesn't always work out that way. Here's a graph of the Standard & Poor's 500 since the 1st of January this year. This is pretty phenomenal. This is much better performance than the ASX 200. So, what is the moral of the story? Don't park all your eggs in one basket, or another way to phrase it, don't park all your eggs in one country. This is interesting. It doesn't necessarily deal with business other than infrastructure spending. This is share of bridges by state in poor condition. Now, this is a survey of like 40,000 bridges. So a black area means that they have a high percentage of bridges, which is still not that high, but overall it adds up. Some states are amazing in terms of maintenance of bridges, others are poor. Why is this significant? Well, we saw the news with regard to a ship knocking a pylon to a major bridge, and lo and behold, it collapsed. Well, it's possible elsewhere. But these are not just maritime bridges we're talking about. These are highway bridges, etc. And every time money is spent rebuilding a bridge, that means more steel, more jobs, more money spent, and that is positive for economies. Treasury wine estates, well, that's in the news this week because China has dropped the tariffs. This is positive for Treasury wine estates, so I figured let's take a look. I've liked this company for a long time, and back in September, I believe, I recommended it. Treasury wine has risen, but it's still kind of lagged the rest of the market. Currently, it's trading at $12.71. However, look at the chart. Look at the far right side. It's really starting to rise since December. It's a very positive movement. So this movement from China has been well flagged. But you know what they say? It isn't over till it's actually over, or in this case, it's not good until it actually does have tariffs removed. Now, the stock popped, but if you look again at the chart, you'll see that it is very close, right around a previous high. Will it stay above this or not? Let's go to the numbers. First of all, market cap is $10 billion. This is a large company. It does own a lot of wine. The price target I have, which is actually a UBS price target, is $15.25. I would maybe have it slightly higher. However, it's been a disappointing company so far. Revenue growth 2023 to 2026 is stellar at 12%, and earnings per share growth is very strong, 16%, and dividend growth rate is also strong. So the fundamentals say that this company is growing again. Then let's look at ratios. The PE on the 2025 earnings estimate, my estimate is 66 cents. That's 19 times. That's not overpriced. For a company with these growth rates, it's actually cheap. The yield on the 2025 dividend estimate of 43 cents is 3.5%. That's attractive. That's kind of par for the course, right in the middle. Free cash flow is around 4%, and the payout ratio is 64%. As I said before, this is a premium Australian wine company. They have Penfolds, which has Grange Hermitage, and many other very strong brands. Another is St. Henri. It is well known globally. Now the China tariffs are eliminated, so my recommendation is it's still a buy. The chance of making a profit now is better than ever. Most brokers like it. Second company today is Premier Investments. That was in the news. They updated the market. The code is PMV, and it's trading right now in the ASX at $31.10. This chart is a 5-year chart, and it shows a lot of volatility, and it's just near its previous highs. Looking at the numbers, 12-month price target by UBS again is $31. My price target is around the same. Revenue growth rate from 2023 to 2026 is only 4% per annum. The earnings per share growth in this period is 7% per annum, and the dividend growth these 3 years is 7% per annum also. On a ratio basis, the PE on the 2025 earnings estimate of $1.98 is 16 times. This is a little bit cheap. The yield on the 2025 dividend of $1.43 is 4.6%. That's attractive. Free cash flow is 9%, and the payout ratio is 72.5%. Many of you will know this company because this is the company that Sol Lu controls. They plan to spin off Smiggles to shareholders next January. This could be a positive. A lot of times, spin-off companies outperform when they don't have the handcuffs of the large parent company. However, Smiggles is not a huge business with a lot of different lines. They benefit from the cheaper cost of financing and better distribution capabilities and management capabilities of the overall Premier Group. So let's see how Smiggles works on a spin-off. Also, this is another little secret. Companies that have a lot of debt will load the debt into the spin-off company, so the new company that you receive out of the spin-off is loaded with debt, and that makes the parent company more attractive to institutional holders. The growth on this company is a little slow for me. Let's take a look at inflation and population growth. Now it's really underperforming. As a consequence, I'm not bearish on it, but I'm not bullish. I'm simply neutral. Let's see how it goes. As always, if you want to learn more about anything I covered today, send an email request to stockwatch@fnn.com.au and direct it to me, Chris Pedersen. Thank you for your time, and I hope you have a profitable week.